Now available on Tata Sky channel number 526.
Hello and welcome. You're watching Property Hotline with me, Kavita Krishnan, on India's first property channel, Magicbricks Now. We'll be answering questions related to home finance today with Kartik Jhaveri. Kartik is the founder and director of Transcend Consulting India Private Limited. Kartik, welcome to the show.
Thank you.
So today is the day most of the banks have come out with the MLCR, or what they call the marginal cost of funding rates. We will be asking you more about that, Kartik. We'll want you to break that down for our viewers. But first, let's take up a question that's come from Samera Bajaj. Now, Samera says that she wants to know about a scheme called Byaj Mukt Awas Yojana in Delhi NCR, which was launched by the Investors Clinic. They are offering an interest-free housing scheme. He wants to know about the scheme in detail and if he should invest his money in the scheme or not. He wants to know which bank is offering this loan and why. Is this scheme legal, he asks. In fact, what I want to ask you, Kartik, is there anything like an interest-free loan? Like you don't have a free lunch?
Absolutely, you're 110% right. I mean, there is nothing which is completely free. If somebody is going to lend money, that lender is going to want to have some sort of interest coming in. Now, who pays it is a secondary question. It could be the developer who pays it, could be the consumer who pays it. In any case, remember, if the developer doesn't pay it, ultimate liability is yours, because most of the times it will be done on your credentials and not on the credentials of the developer. Now, having said that, this is a scheme which has been launched very, very recently, as much as, March of this, pretty much the same month, given that, we're here right on 31st. Now, having said that, what's going to happen is it's a scheme launched by Investor Clinic. Investor Clinic itself is like a channel partner and who's, active into selling. I mean, this is what we understand, right? We have very sketchy information at the moment. But they are a channel partner, a broker.
You're right. Investor Clinic is a channel partner. Correct. They are like, a big time brokerage, if you were to say.
So which is why I'm assuming that they are making bulk deals with developers, because everywhere property is moving very, very slow. Whether it's Gurgaon, NCR, whether it's Mumbai, Bangalore, I mean, everywhere property sales are not happening anywhere close to what the expectation would be of the builder community. But having said that, so therefore there are ways and means of doing this thing, giving you offers. What this scheme does for you is says that, okay, there's going to be no interest. Whatever you borrow in about 100 months, you break the principal into 100 equal parts and you're going to pay it back. And remember, what happens is, if for some reason, if your property gets delayed, if the developer is not able to develop a property and give it to you in good time, the ultimate interest burden will be on you, because it will be you who will be signing some sort of a loan agreement somewhere saying that in case of a default or something, it's your liability. So be very, very careful with whom you are buying an under construction property, which is one thing I'd like to say. And the second thing is, if you're buying a property, just make sure the reputation and the pedigree of the builder, and just make sure his title and paper and everything is nice and clean and clear. As far as it's a clean deal, it's a very safe deal. So that's really what happens. Otherwise, you tend to get stuck for many years then.
So essentially, you need to do a lot of research or a lot of due diligence before you get into a scheme like this.
Correct.
And always do remember that if the builder doesn't pay the interest that you're supposed to be paying on the loan, the liability falls on you, because it is on your name that the loan has been sanctioned at the end of the day, and that will also impact your CIBIL score, like we keep telling you this on the channel. We have Rohan who's called in. Rohan, what's your question?
This is regarding my brother is an NRI, and he's working in US, and my mother is a pensioner who's around 79 years old. So we just want to buy a joint venture property between my brother NRI and my mother. And my mother is a pensioner. So is it possible that we get loan from the bank if these two people apply?
Mother and son, mother is a pensioner. Can both of them apply for a loan?
Technically they could, but given the fact that, Rohan, your mother is as old as 79, what the bank wants to ensure is that there is a certain amount of visibility of earnings, pension, or, generally speaking, a salary of sorts, or a, steady income by which their loan will not sort of come into a default mode for any reason. But hey, having said that, if your brother is also into the picture, why would you actually want to put your mother as the co-applicant to the loan if your brother can actually handle the entire loan EMI and the property can still be in the name of your mother and your brother, right? So that is possible. But the loan applicant could be just your brother, and even if it's a non-resident Indian, there is no problem. I mean, the financing procedures and the method of getting a home loan and all of that, which most institutions follow, is pretty uniform, and the documents are also going to be reasonably standard across institutes. So I don't see a problem in your brother applying for a home loan independently and the property being in joint names.
Okay, so no problem over there, but ideally you could ask your brother to take a loan independently. That'll give you a better deal on the loan. We have Vishwanath who's called in now. Vishwanath, what's your question?
It's regarding pre-EMI scheme. What the banks will offer?
Pre-EMI scheme that banks are offering.
Yes, ma'am. See, when we hello.
Yes.
Yes.
Mr. Kartik, this is Vishwanath from Bangalore.
Yes, Vishwanath, hi.
Hi. See, we get the pre-EMI schemes from bank where the project is already approved by the bank and the developer is quite big.
Okay, go on.
Hello.
Yes, Vishwanath, we can hear you. Go on.
Okay. And they will offer the pre-EMI scheme for 24 months and 36 months like. So, but the developer delays the project for whatever the reasons. And after completing the 2 years or 3 years, the banks will hop on to us for paying the interest.
Yes.
Right.
But unfortunately, the banker and the developer, if they are hand in glove, they are making us fools.
Vishwanath, if your TV set is switched on, you need to mute it. That's causing some disturbance. Yeah. Go on, tell us what's your question quickly.
Yes, ma'am.
Yeah. Tell us what's your question very quickly. So you're essentially saying you want to know the credibility of this pre-EMI scheme. Am I right?
Yeah, pre-EMI scheme, and when the developer delays it, and the bank will hop on to us for making the payment. So the project itself is approved by the bank. Is it not responsibility of the bankers to look into the project and see that the project is finished and handed over to the concerned people?
Right. Let me get Kartik in over here. Vishwanath, this is precisely what we keep, discussing on this show. Kartik, the bank is not liable, right? The bank only wants to get its money back.
Yes, see, Vishwanath, the bank is not liable. And for you and for all the viewers, what happens is when a project is approved, the financing institution is simply saying that I have gone through all the paperwork for this developer, for this specific project, and all the papers are good, in good condition, they are in good order, the title is absolutely clear and marketable and free, there is no encumbrance of any sort, there is no possible legal hassle, or there is no possible litigation which might come up on this piece of land. Everything is absolutely good and clear. They have taken the approvals from the municipal authorities and whatever needs to be done in terms of various governmental bodies, licenses, approvals, authorities, everything's in order. That is all that they are trying to communicate to you when they say that they are approving a project. Now, what happens in terms of a construction finance, when the builder is going to some bank to borrow money, very often the builder on his own may not have such strong credentials to probably get a line of credit himself. And which is where this is a very interesting via media arrangement which has been brought out by both the parties together, because both the bank as well as the developer are earning money out of it. So what they do is they use your PAN number, they use your credentials, and based on your credentials, the lending institution is giving you a loan. The lending institution has approved the project to make sure that the project is clean and there is no possible problem in the project. And therefore, with your credentials, the builder is now borrowing money on your behalf. Okay, on your name, the money is being given to him. Now, obviously, you have to bear a pre-EMI till the time you are given the possession of that property. So, in that interim period, as a discount being passed to you, or for the borrowed money, the developer is paying so much lesser rate of interest. He's probably paying 9% on your money versus if he was to borrow it on his own, he might be paying 14 or 15% on construction finance. So this is the via media arrangement. And for you, it's a great arrangement as a consumer because you don't have to pay that pre-EMI interest. But yes, your risk is absolutely there. If the developer fails in his obligations, for whatever reason, he's not able to complete it, or if there is a governmental issue or if there is a regulatory change, for whatever reason, if the project gets delayed, then the liability will ultimately fall onto you and will affect your CIBIL score, as we keep saying all the time.
Right.
And of course, bank is not definitely accountable in this kind of a situation.
So bank is not accountable. Bank is only interested in getting its money back, and it will get its money back. If in this case, if the developer defaults, the buyer is liable to repay that loan. We have Raj, who's written in on our website www.mbnow.in. Now Raj says that he took a loan for buying a flat, but Kartik, the bank is charging thanking charges for it.
Okay.
He wants to know whether he's supposed to pay this, why can't the builder bear it? And he also wants to know if paying this amount is compulsory as per RBI rules, or is the bank just charging this on its own? This seems very funny at a time when credit growth is so poor.
Correct.
If I'm taking a loan from the bank should in fact pay me for taking that loan. I should be the one who's charging thanking charges.
We always want some sort of discounts. Now, thank you charges is something very, very strange and bizarre. I haven't really heard so much about it. But, let's give a benefit of doubt, right? And therefore, what my suggestion to Raj or anyone for that matter would be, why don't you write an email or write a letter to that institution saying that whatever you want, why don't you demand that in a proper formal written format? So if they actually make that demand in a proper format, then maybe it's a charge for doing something. Maybe it is understood, erroneously by Raj or something of that sort. It could be some sort of a fee probably, but we don't know. And if it is absolutely legal and valid, by all means the bank would write it or the lender would write it. If it was obviously something other than legal, then naturally there's not going to be anything written to that effect, and therefore there is no obligation for you to pay anything then.
And Raj, I would really like to know which bank or which financial institution is asking for these thanking charges. Because like I said, they should be thanking you for taking that loan.
Right.
Madhav has sent in a question through email. Now he wants to know if someone who's drawing a pension of 60,000 rupees from the central government can get a home loan. Can this income be taken into account?
Yes, the answer is absolutely yes, because pension is salary. Now the question is that you've retired from service, and that obviously means as a result of which you're getting a pension. Have you taken early retirement is one question that I'd like to ask, because if it is actually early retirement or voluntary retirement, and if there is a pension possibility of this sort, then yes, they will definitely consider it. However, more often than not, it's going to be a pension which is available on retirement. So if it is that kind of a pension that you're getting, then there might be a little bit of a trouble, because ordinarily most banks and lenders want to have that 15-year or 20-year tenure end by the time you reach the age of 60, 65. So, normally they like to go about 5 years into retirement, and which are the early 5 years, and, where everybody imagines that the pensioner also has a reasonably large amount of cash in hand at disposal. Maybe they are going to prepay the loan off, or maybe they have some pension. So at least for the first 5 years of retirement, they are not really worried. It doesn't seem like a high risk proposition for them. So, we don't know his age as such.
No, but Kartik, one thing that I would want to ask, and a lot of Indians, in fact, tend to buy their first homes.
That's right.
At the time of retirement. And they generally do this either from their the PF corpus that they
Correct.
get, or from, by taking a home loan based on their pension. Now, how advisable is that really? Does it make sense really from a financial planning perspective to get into a liability at the time of retirement?
The question is more of a necessity. So if you do not have a property, very often people work and they are traveling across the country and across the world these days. So very often they feel that what's the point of buying a property if there's going to be nobody to take care of it and upkeep it. So then in that case, one has to really start accumulating money, and more often than not buy it lump sum and straight away at the time of retirement. Because at the time of retirement, it's really hard to get a loan, at least in India as of now, where no banker, no institution is happy to even talk to you if you're like 55 or 60 or somewhere in that range. Very often what then happens is people sort of do a co-application with their younger children who may be in the range of about 35, 40. And then you're putting up obviously your house as a collateral. Somebody might take an additional collateral. But largely speaking, the approval is therefore done more or less on younger children that you might have, and on their credentials, and not so much as in your credentials, because one doesn't know.
Also, since most people in our generation, for that matter, like you said, are traveling across the country, across the world, in fact,
right.
A lot of them for their careers, and they're not really thinking in terms of buying that first home or a home to live in post-retirement.
Correct.
Also, most of us don't have pensionable jobs. So in that scenario, when should you actually start thinking of planning towards buying a house? What is that age when you should start saving money, and ideally what age should you buy your home at?
You know, I mean, a lot of times I actually suggest that when you start off your career and when you have lesser responsibilities, one of the things you can do is do equity investments. And the other very interesting thing that you can do if you don't really have too much of liability and commitment on your resources is to buy a property pretty much when you start earning. You see, then irrespective of wherever you are moving, as long as you have an apartment and there is a society or an association to take care of things, even if you've not rented it out and it's your property, it's pretty good, there's no problem. So pretty much start doing it right at the beginning. If you don't do it at the beginning, then at least start accumulating some money towards this, just the way you accumulate money for retirement planning, whether you're buying a pension policy or whether you're buying a retirement fund or whether you're just making a voluntary investment into a mutual fund for garnering your retirement corpus. In that same fashion, why not make a little allocation right from day one of your income to buy your house as well? Because you might decide to buy a down payment at some point in time, or you might actually want to collect all that money and buy the house pretty much at your time of retirement.
So essentially, if you plan to buy that home now.
Yes.
If you just start your career, that's the best time to buy the home, and the tax deduction doesn't hurt at all. We have Nazir Ahmed who's called in. Nazir, go on, tell us what's your question.
मुझे को ये चाहिए जानकारी, आप जो होम लोन दे रहे हैं ना, इसकी जानकारी मुझे चाहिए।
आपको क्या जानकारी चाहिए होम लोन के बारे में?
आप लोग किस बात पे ये दे रहे हो, इसके लिए क्या डॉक्यूमेंट चाहिए आप लोगों को वो जानकारी चाहिए।
नजीर जी, हम आपको होम लोन नहीं दे सकते। होम लोन जो है बैंक या फाइनेंशियल इंस्टीट्यूशन आपको दे सकती है, पर हाँ, कार्तिक झवेरी हमारे साथ हैं, वो आपको ये ज़रूर बताएंगे कि होम लोन के लिए आपको किस तरह के कागजात या डॉक्यूमेंट्स देने पड़ेंगे। कार्तिक, हाँ।
सो नज़ीर जी, सबसे पहली चीज़ ये है कि आपको आपका इनकम डॉक्यूमेंट्स, यानी कि जो आपका आमदनी है उसके डॉक्यूमेंट्स देने पड़ेंगे, जैसे कि सैलरी स्लिप होता है। यदि आप बिजनेस करते हैं तो आपका इनकम टैक्स रिटर्न होगा, कंप्यूटेशन ऑफ इनकम होगा, बैलेंस शीट होगा, प्रॉफिट एंड लॉस होगा वगैरह। तो अगर ये सारी चीज़ें देनी पड़ती है, साथ में आपको ये भी देना पड़ेगा कि आप कहाँ पे प्रॉपर्टी ले रहे हो। आपने अगर आइडेंटिफाई कर ली है प्रॉपर्टी, तो ये कौन सी प्रॉपर्टी है, ये अंडर कंस्ट्रक्शन है या रेडी टू मूव इन सेकंड रीसेल वाला प्रॉपर्टी है, तो प्रॉपर्टी की सारी डिटेल्स देनी पड़ेगी। तीसरी चीज़ आपको ये बतानी पड़ेगी कि आपके पास हाल में कितना पैसा है और कितना आपके पास कितनी संपत्ति है आपके पास, कहाँ कहाँ आपने इन्वेस्टमेंट किया है और कितना लोन लेना चाहते हैं आप। फिर अगर सैलरीड होगा तो आपका फॉर्म 16 वगैरह भी आपसे मांगा जाएगा, जो बेसिक एड्रेस प्रूफ होता है, पैन प्रूफ होता है, वो सारी चीज़ें मांगी जाएगी। वेरिफिकेशन होगा आपकी प्रॉपर्टी का भी और आपकी जो हाल का जो एड्रेस है, दोनों ही जगह पे वेरिफिकेशन होगा। तो काफ़ी लंबा सारा चौड़ा प्रोसेस है देखा जाए तो, पर साथ ही साथ ये प्रोसेस बड़ा जल्दी से हो जाता है अगर आपके सारे डॉक्यूमेंट्स ठीक ठाक हैं, सारे आपके कागजात में कोई किसी भी प्रकार की कोई कमी नहीं है, तो आपको लोन बहुत ही तुरंत हफ्ते या 2 हफ्ते तक में ये सारा प्रोसीजर ख़त्म हो सकता है। आपको शुरुआत से ये करना है कि यदि आप चाहें तो बैंक में जा सकते हैं, किसी भी बैंक में जो होम लोन देती है, या फिर आप किसी भी नॉन बैंकिंग कंपनी के पास जा सकते हैं, जैसे कि दीवान हाउसिंग है या HDFC है या अन्य ऐसी जो इंडिया बुल्स इस टाइप की जो कंपनियां हैं जो बैंक नहीं है पर ऐसे होम लोन्स के बिजनेस में जो काम करती है, तो आप उनके पास भी जाके अपना लोन का एप्लीकेशन कर सकते हैं। लोन के ब्रोकर्स भी होते हैं जो आपको मदद कर सकते हैं। तो काफ़ी सारे ऑप्शंस है, काफ़ी सारा प्रोसीजर है, पर वो इजी करने के लिए आपके लिए बहुत सारी मदद भी अवेलेबल है।
Right, so that's Home Loan 101 for you, Nazir Ahmed. मेरे ख्याल से आपकी मदद हमने ज़रूर की होगी, और अगर और कोई सवाल होगा तो ज़रूर हमसे कांटेक्ट कीजिए, संपर्क कीजिए, और हम आपको उसका भी जवाब देने की कोशिश करेंगे। Let me take you quickly through that Home Loan 101, the documentation that you need to keep necessary, the paperwork that is needed if you want to apply for a loan. You will need identity proof, you will need residence proof, you will also need a 3-year IT return. To start filing your IT returns now if you intend to buy a home. You will also need to show salary documentation. In fact, your IT returns will in fact stand as proof of your salary. If you don't have IT returns, then you need salary documentation. You will also need to show property details if you've already identified that property that you want to buy. With that, before we move on to the next question,
yes,
there's something that the RBI has done which will probably change the way we're paying home loans, which promises to make home loans more transparent in terms of pricing. And I wanted you to break that down for our viewers. Now, they've brought in this thing called marginal cost of lending rates, marginal cost of funding, which is now being used to determine the base rate at which the bank lends to you. Base rate is the rate below which the bank cannot lend to you.
Absolutely.
So now RBI has mandated banks to start using MCLR to calculate that base rate. If you could just tell us what this means.
See, what used to have, let's go back a little bit just to sort of understand and give a perspective to what we are talking about. So base rate is your basic rate, like you mentioned, that the loans will not be given below the base rate. So what happens is, as a bank, you don't have a steady flow of cash coming in on a on a particular time. It's erratic, it's irregular. So one is you are going to have depositors giving you a lot of money. So obviously there is a cost to that because you're going to give them interest on that. The other thing is, for all other businesses, you will have to generate loans either from RBI or you'll have to borrow it from the open market. Now, when you do that, every time the bank is borrowing this money, the cost that the bank is incurring to borrow this money is different, and it has to come to an aggregate rate called the base rate. So when it does a lending activity and when it gives a consumer a home loan, they will say base rate plus 2% or base rate plus 1.5%. So as their base rate changes, automatically the benefit is very often expected to be passed to the consumer.
But which is not happening.
But which does not happen, yeah. And because it does not happen, and the RBI said that every time RBI makes a revision of rates, some people benefit, some people don't benefit, and because of so much of disgruntlement around the movement of interest rates, they came out with this system saying that you use what is known as the marginal cost-based lending rate. Now, what happens with this is that this base rate, which was an aggregate rate, is going to get broken down. So the bank might be borrowing some money for the next 2 years, they might be having liabilities for 5 years, 10 years. It's a little technical and complex to understand, because at any point of time, the bank has borrowed money and actually owes its lenders various different time scales of payment.
Essentially what you're saying is now what the banks have to do is if they borrow money for 2 years and if they lend for 2 years,
that's right,
then they have to charge the same rate of interest.
Well, at least they will have to use the same marginal cost rate plus whatever premium they want to charge based on the risk that they perceive.
So a lot of these banks, like for instance, the biggest lenders, SBI, ICICI Bank, not ICICI Bank, but SBI and Bank of Baroda, both of them have put out their MCLR rates today.
That's right.
And all of these MCLR rates are, at 3-year, 5-year, 1-year tenor. Now, obviously, these are linked to the deposit rates that they will be paying, the interest on deposit.
Correct.
But your home loan is typically a 20-year loan.
Absolutely.
So, what rate are they going to link it to? How can a customer know this? And also, very importantly, for a person who already has an existing home loan, how do I benefit from this?
So my sense is that, if MCLR is announced based on a time frame that the bank's liability is going to be matched against its own lending or assets, 3 years, 5 years, you might even have a 10-year rate. You might even have a 15-year rate. And based on that, the benefit or non-benefit will be passed on to the consumer. So for example, just the way you mentioned a 3-year rate, 5-year rate, I'm expecting, let's see how it pans out, because it's just the first day virtually. And we'll have to wait for a couple of days to exactly see how this really plays out. But having said that, my sense is that there will be a 10-year rate and there will be a 15-year rate. Because to give a 15-year loan to somebody, the bank is in the business of borrowing and lending. So the bank has obviously borrowed that money for 15 years, and it is going to lend to somebody for 15 years. And the spread is what they learn.
How this is applicable to new borrowers is what they tell us.
Correct.
So how does an existing borrower benefit from this? Do I have to go to the bank and tell them to change it?
Oh yes, more often than not, you'll have to write to the bank. Now, depending on the procedure, some banks will just pass on an automatic rate benefit to you if there's a cut, but very often you need to also write it back. Even if you're an old customer, for your loan, the bank would have at some point of time borrowed some amount of money, and there is a certain cost that the bank is incurring on that money. So what is going to happen is it will go back to its books and start calculating the cost of your loan's borrowed money. So it's slightly complex.
So essentially what we're trying to tell you is this: the way a loan is priced is changing.
Yes.
This is the time you need to be proactive. Go talk to your bank. This new formula kicks in from the 1st of April. So go get in touch with your bank and ask them what is your MCLR price and how can you change to that price, and also figure out whether it makes sense for you, whether it is beneficial for you to move to the MCLR rate. We have AP Mishra now, who's called us on the phone line. Mr. Mishra, tell us what's your question.
Ma'am, there are 3 questions basically.
Okay.
First one is how to get a rebate on a home loan before possession of the house.
Tax rebate on home loan before the possession of the house.
Yeah. Because what
Okay.
happens, you have to keep on waiting for possession for 2-3 years, but
Right.
you don't get any tax rebates.
Okay, tell us very quickly what are your other 2 questions because we are running out of time here.
Various rebates with section for self-occupied and rented. And thirdly, how to adjust your EMI as per the what you give to builder and not as per the bank requirement.
Okay.
Okay,
Let's
we'll-
start with the last question first, Kartik.
So I mean, the first and the last question is more or less sort of linked. So it's about the pre-EMI. What's the treatment that will be given to it? So obviously, when you don't have possession of the property, you're paying the pre-EMI, but you're not getting any benefit. Now, what the law says is that you have to aggregate the benefit and apportion it over the next 5 years from the date of your possession. So whatever interest component you have paid before your possession will all be clubbed together. Let us say that total interest that you have paid is, for example, 5 lakhs before you got the possession. Now, after getting possession, that 5 lakhs will be distributed for the next 5 years, which means 1 lakh each year for the interest that has already been paid. And then from the date of your possession, whatever EMI you are anyways going to pay, whatever interest you will pay as a part of that EMI component will also be a part of your overall 2 lakh benefit that you have, for your interest benefit under Section 24. So that is what is going to be the treatment for your rebates. So immediately you will not get it, you will get it much later.
You'll get it much later, especially if you invest in an under construction
That's right.
property. With that, it's a wrap on this edition of Property Hotline. Kartik Jhaveri, thank you very much for coming in. If you have any feedback or suggestions that you would like to share, any questions that you would want to ask, also we know that home loans are undergoing change, the way they're calculating. The home loan lending rate is changing. If you have any questions specifically regarding that, do get in touch with us through email, Facebook, Twitter, on our website, or you can simply call us. Thank you for watching Property Hotline. Keep watching Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/Magicbricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magicbricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magicbricks Now.